Good morning, everybody. This is the live market open for Wednesday, November 25th, the day before Thanksgiving. I'm Yohay, Elam of ForexCrunch.com and Market Movers, doing the show as usual for FX Street. We have a very busy day today and then a quiet day tomorrow. But we had some action yesterday and also expecting some today. So as always, we're going to cover recent developments, discuss some charts and levels in the next 24 hours, and of course, looking forward to your questions. I see quite a few of you in the room already. So if you can't see the chat box under the video, please go to tlk.io/fxstreet-forex-live-video. Okay, so let's begin. Before we look at what we had yesterday, the general theme is a weaker US dollar across the board. Okay, so we can see this in euro dollar making its way back up. Okay, 106.73 at the moment, above this resistance line of 106.70, another 107.10. This dollar yen is also pushing lower, looking towards support at 122.20, and even further support is at 122, not that far away. Okay, so it's certainly leaning lower, weaker US dollar. Dollar CAD that already got closer to the highs of 134.60 is now struggling to hold on to 133. Australian dollar reached resistance at 72.80. Very nice over there. Let's see if it continues higher or not. And the Kiwi is also challenging resistance at 65.70. A bit less, but at the higher end of the range. Only pound dollar, which got which was hit yesterday by the Bank of England. It's also recovering from the lows, but it was hit hard yesterday. Okay, now let's talk about the developments of each single currency. Or yeah, beforehand, let's talk about what happened to the US dollar. Okay, so quite a few things happened. First of all, GDP came out as expected. There were no surprises over there. That sort of didn't change the picture. But then consumer confidence yesterday came out weaker than expected. That's on the data front, okay? We had it come out at around 90 points. And it implies weaker shopping in the shopping season now. Thanksgiving, Black Friday, Cyber Monday, and of course, all the way to Christmas. But worse off, I think that there's been some more profit taking towards the holidays, and the markets are beginning to price in more and more the chances of a rate hike. So let's look at the chances of a rate hike right here. So they've reached 77.5%. And it's important to remember, I learned this yesterday from Adam at Forex Live, that these are the implied probabilities for 0.50% or 50 basis points of our interest rate. Okay, now the Fed has a range to 0.25 to 0.50. Okay, so these figures imply more or less 100%, or bond markets are now fully pricing in, or almost fully pricing in, a rate hike in December. And that's in line, of course, with economists. And when that happens, you have some kind of profit taking as well. We're also getting closer to the end of the month, and we've seen the US dollar strengthen quite a bit, for instance, against the euro. So it's not such a clear, so there's not much steam left at the moment, at least. Okay, this doesn't mean we won't have a change, but as I say, I think every morning Forex is never a one-way street, so we're seeing some changes over there. Now let's look at individual currencies. Let's look at euro dollar. Okay, euro dollar, yeah, I talked about the levels beforehand. What we had yesterday in euro dollar is we had a strong German IFO number at 109. Okay, it was expected to come out at 108.2, but the German industry, despite the Volkswagen crisis, despite the refugee crisis, despite the terror attacks, businesses in Germany are more upbeat. They enjoy a weaker euro, so that makes them happy because they're export oriented, and also low oil prices also give them a boost. Okay, so that was the support on the side of the euro. Okay, talks about US GDP. Trade balance was as expected. Consumer confidence was lower. Yesterday, we also had the downing of the Russian plane in Turkish airspace. I'm sure you heard about that. That was all over the news. It's a complicated case. Too many forces there on the ground. The Turks are fighting against the Kurds and not so against ISIS. The Russians are helping the Assad regime, which implies fighting ISIS, but also fighting against moderate groups. And you have Turkmen rebels over there, and well, it's you can talk about that for hours. Anyway, this geopolitical event is supportive of the yen, okay? Because the yen is a safe haven currency, and when things get worse, there is some attraction to buy the yens, okay? So we're seeing that as well. That's on that front. I talked about the pound. Yesterday we had the inflation hearings from Carney and other Haldane, which is a real dove in the Bank of England. They spoke before a committee in the British Parliament in Westminster, and they were relatively dovish on inflation. They also talked each time I talk about the British economy. One of the strong points I mentioned is that the economy in the UK is doing well and that wages are rising 3% year over year. Now, these two said that the increase in wages is slowing down. Okay, so it's similar to what Draghi says about, yeah, core inflation is rising, but it's slowing down. You can't see that on the numbers, but if a central bank tells you that, it has an impact on the currency, even if he's wrong. Okay, so that hurt the British pound. It fell below support at 151.10, and since then it found lower support at 150. 58 or 150.50 if you wish, and since then it bounced back up thanks to this weakness of the US dollar, so we had it bounce back up to the same line of 151.10. okay, so at least we have very good technical behavior in cable. Okay, we talked about euro, pound, yen. Let's talk about the Canadian dollar. We talked about this yesterday. The Saudi Arabia, huge producer, they said that they were willing to cooperate with OPEC and non-OPEC members in order to stabilize prices, considering cutting production. There's an OPEC meeting on December 4th. That's next Friday. But it's important to note that I believe it's a fade because they haven't been able to cooperate in the past within OPEC, and outside OPEC it's even more complicated. Anyway, the price of oil stabilized. Let's look at the figures. It's challenged the highs. It even went all the way to, you can add another line here, 43. Okay, it reached 43.40 yesterday. Now we're back down to the previous range. As I said, there's just two. It's hard to believe that with Iran coming online and with shale production, they'll be able to lift prices. I still doubt that, but at least they're showing some will. They're also, Saudis are a bit in trouble because, well, oil prices have been low for a long time. They have this peg to the US dollar, which is hurting them, and they have some internal problems in there as well. Okay, so sort of infighting between the royal family. It's worth watching if the regime continues its stability, its authoritarian rule, or we have some trouble over there as well. We have a question here already. Good morning. Strange they don't print what the pilots actually say. What happened? Russia cut gas to Ukraine, perhaps a little tightening on the gas tap to Turkey to show who's the boss. Yeah, there's a lot of power politics going on over there. Russians also threatened to cut some mutual projects with Turkey. And on the other hand, we know that the planes, this Russian fighter jet invaded Turkish airspace probably for only 2 or 3 seconds or something like that. So maybe the Turks had an easy figure on the trigger. I don't think Russia nor Turkey wanted this kind of escalation. Anyway, Russia is blaming Turkey for supporting ISIS by buying their oil, maybe under the table, and they think there is some truth to that. And you can also say that Russia isn't really fighting ISIS because they're also bombarding the moderate secular groups. So it's too many bad guys over there, not so many good guys. So anyway, what we need to know for currency markets is that we have times of trouble. We're going to see that strengthening the yen. I hope and believe that this story will get away from the headlines in a few days, that no more Russian planes or Turkish planes or whatever will be downed. The question here, what downed Russia's Su-24? Expected oil, gold to rally, but it never got excited. Well, first of all, we had a move higher in oil. You can see the screen here, the chart on your screens, but I don't see that as related to the downing of the Russian plane, because there's just too many sources of oil in the world, and nothing will be disrupted. Syrian oil is minimal in global trade. It does fund ISIS, which is a bad thing. They get about $10 million US per day, if I'm not mistaken, but it's not such a big deal in terms of the quantities of oil are not significant, and there's no risk currently of a flare-up that limits Saudi production, Iraqi production, anyway, Nigerian production, Russian production. So gold, no, gold is a bit stuck. Looking at the bottom, yesterday I was in the show with Dale, Valeria, and Mauricio. We talked about gold prices, and yeah, there's just less speculation. Yeah, 1078 sort of hovering over the lows. Okay. Anyway, that's to answer your question indirectly with oil and the Canadian dollar. Regarding the Australian dollar, yesterday we had a speech from Glenn Stevens, the governor of the RBA. He said that he's more than willing to cut interest rates if that would help the economy, but he's not sure it will. Okay, so that gives us a sign that there will be no rate cut in December, and that's next week. Actually, that's on Tuesday. They have the decision in less than a week, and also that, remember, the Reserve Bank of Australia doesn't meet in January. They're on summer holiday in the land down under, so they meet only in February. Okay, so of course there is always a chance of a rate cut, but we would need the Aussie dollar to rise quite a lot. Okay, so I believe they would use this rate cut tool in Australia to down the Australian dollar if it rises. But apart from that, I think they prefer to keep more tools in the shed. So that allowed the Australian dollar to rise. 72.80 is resistance if we're really nicely at the spot. Higher levels are 73.60, 74, and 75. Okay, 72.20 turns into weak support, I would say, with 71.50 much stronger support. The other question I see regarding United States, let ISIS take over the National Bank of Iraq. Oh, it's gold and cash. I don't know much about that story, but there is quite a mess. Iraq was a dictatorship up to 2003 with Saddam Hussein. Bad country, that's for sure, but they weren't involved in international terrorism, and since then Al-Qaeda found fertile ground in Iraq, and then it turned into ISIS, and now you have so there are the Sunni militias, and you have the Shia ones in Hezbollah in Lebanon, the Iranians. Anyway, it's quite a big mess. But regarding the Iraqi gold, I don't know the story there. Okay, New Zealand dollar, nothing happened regarding New Zealand, but with this general US dollar weakness, we've seen the New Zealand dollar also take advantage of that. And you can see this dollar weakness also in dollar Swiss. Remember, the Swiss National Bank intervenes. It said it out loud, and in general, we have it falling a bit lower. It goes hand in hand with strengthening of the euro. You're asking question: do you play binary options? No. The answer is no. Regarding a Fed hike in December or no hike, yeah, it's less about binary options. We can talk about that. I believe it's partially priced in. Markets are a bit looking now towards what will happen after this rate hike and thinking, okay, will the Fed raise rates a lot in 2016 or just a bit? So I think the consensus stands at just a bit, which means every quarter, every second meeting, every other meeting, so another 100 basis points in 2016. But the Fed might hike in December and give us another sweetener and hinting it's going to be even slower. Okay, so that could impact the US dollar. What I see is that the US dollar will strengthen on a rate hike, because even though markets are well prepared for this move, it's still a move of historic nature. It's still a big deal. Not everybody's fully convinced it will really happen. So the immediate reaction might be a stronger dollar, but afterwards we might see it fall back down, some kind of buy the rumor, sell the fact. Also, if you look at history, you can see that the US dollar weakened after the Fed began these kind of moves. Okay, let's go back to the events we have today. So this is dollar Swiss. Yeah, okay, so we talked about all these events. Today we have a busy day. Okay, so in the United Kingdom, we have the autumn statement by the government. It's more of a, political game in the United Kingdom. More, the government presenting the budget and the opposition mashing it. It's quite normal. But what we also have in this event is fresh forecasts, okay? Fresh forecasts on inflation, on growth, things like that. So that could impact the pound. It begins at 12:30 GMT, 12:30 also in London. But there are procedural things, and it's not that the statement is released and then the headlines go on the wires. We'll have to wait and listen, if you wish, to George Osborne, the Chancellor of the Exchequer, lay out his manifesto, his autumn statement. Okay, so perhaps the news will come only later on. The bigger events today, we have U.S. durable goods orders at 1:30 GMT. It's the main event out of the three we have, more than three that we have today. Let's look at what's expecting us. So durable goods orders. So first of all, you can see this FX rate calendar. You have enough time to examine it, but as you can see at 2:30, well, my time, 1:30 GMT, we have lots and lots of events, okay? Headline, durables goods orders for October expected to rise 1.5, bouncing back after a fall of 1.2. But this is volatile. This is, we should look also at ex-defense, for example, ex-defense transportation, because orders of aircrafts almost sometimes skew the figures. So we're expecting here a bounce back as well from after a fall of 0.4, a rise of 0.3. This is a better reflection of investments, okay? We're also expecting regarding durables goods orders, yeah. So these are the main things to watch on that front. Then we have all the figures related to personal spending, personal consumption, and all that. So yeah, we have personal spending expected to rise 0.3 after only 0.1, and personal income expected to rise 0.4 instead of 0.1. But this is the most important figure, okay? Core personal consumption expenditure price index, or core PCE, year over year. Why is it important? Because the Fed says so, okay? Because this is the key inflation figure that the Fed looks at. It rose 1.3 year over year last time in September, and we're expecting a repeat of this number. So this will, if it rises to 1.4, it'll be another sign that there's going to be a hike. If it falls to 1.2, there are going to be doubts. Anyway, it's usually released on its own, so it has more of an impact. And today's very, very busy day because of Thanksgiving, so we have quite a few figures released at the same time. We have also the non-core figure, which is less important, and we have the jobless claims that are usually published on Thursday. We're expecting more of the same, 270,000, very similar to 271. The trend in general is lower, but the past few weeks it was a bit more stable. So very, very dense release. As with other bulk releases, we're going to have a bigger impact if all the numbers go in the same direction. That means all the numbers are positive or all the numbers are negative. expectations, as we've seen now, are relatively high. High, that means that we're expecting an improvement in spending, income, durables goods orders, core durables goods orders, and also jobless claims. Yeah, they're expected more of the same. So we might have, my tendency is that we might see a disappointment over there, okay? And that could add pressure on the US dollar. But if we have even small surprises, so there are going to be small beats on high expectations, and after this sell-off of the US dollar, it could provide an opportunity to square positions, to undo the correction, if you wish, and rise back up. So I think there's a good chance for a miss, but if we have even a very small beat or as expected, perhaps the US dollar can recover. Okay, so that's at 1:30 GMT. We have at 2:30, sorry, at 2 GMT house price index. That's the official number from the government. Nothing special over there. We have the services PMI from market, not from ISM, which is more important. It's expected to rise to 55.2 from 54.8. That's sort of also an early indicator, but we will get the ISM services PMI or non-manufacturing next week before the non-farm payrolls. So there's more focus on the events that we'll have at 3 GMT, and these are the new home sales. First of all, the new home sales, okay? So month over month, we're expecting an improvement also here from 468,000 to 500,000. And at the same time, we have the revised consumer sentiment. Let's see if it remains at the same level as expected, 93.1 to 93, or if it follows suit after the conference board, the CB consumer conference that we had yesterday, that disappointed. Okay, so in general, this is only a revised figure and it's overshadowed by new home sales. But because we had yesterday poor figure from another survey, another consumer confidence survey, it's also important. New home sales are usually, well, published on their own, and they're very important because every sale of a new home implies building the new home, building infrastructure, schools, roads, hospitals, things like that. Okay, so anyway, it's a very, very busy day today. And we have afterwards the, well, as usual on Wednesday, the inventory is important for the Canadian dollar. Let's see if they continue rising. Last week they had sort of this relative small pause. I mean, they did rise, but only a bit. And then, yeah, towards the end of the day, for those of you trading the Kiwi dollar, we have trade balance from New Zealand. It's important not only to look at the absolute figure, but also to look at exports and imports. Okay. And last but not least, for those of you trading the Aussie, we have private capital expenditures. It means investment, future. So this is also important for those. Let's see if it gives another boost to the Aussie or slows down. It's a quarterly release. Okay, just to summarize the US events, we have here on the chart, important to watch at 1:30 GMT, the durables goods orders, core PC price index, and jobless claims in this specific order. And at 3 GMT, the new home sales and also the revised consumer sentiment. Okay, that was a long preview for the day's events because they're really busy. Now I see we have a few questions on some of them. If the hike is, say, 25 basis points, could that start a carry trade play for the USD, hence a huge rally? No, the interest rate would need to rise a lot and fast in order to get to pile into US dollars. I mean, on a crazy basis. You have higher yielding currencies. The euro is a funding currency, but I believe that these funds will only partially go to the US dollar and more to other currencies. For instance, if Australia ended its rate cut cycle, we could have a flow over there. That could be a more classic carry trade. Doesn't mean the US dollar cannot strengthen even more, but a lot of the strengthening has already occurred, in my opinion. Question from Alexei. CB says purchases will resume on January 4th, 2016. How can this affect your dollar? And what did they really mean about that? First of all, for me this is news, so I'm not aware of this headline. Perhaps it's, as I see it, it looks like they're just going on holiday. January 4th is Monday, the first Monday of the new year, right? I'll take a look at my calendar to see if it's correct. And I think it's just a mention of a holiday as far as I see that. Anyway, and before the summer, they told us they'll front load purchases. They'll buy more bonds before the summer because of low liquidity, and they really did that, and then less in the summer. So maybe now they're also accumulating a bit more and then take a break between Christmas and New Year's. So as far as I see it, I'll search for the headline and give you a fuller answer, but it doesn't seem to me like something that would move. Yeah, I see. Okay, I'm looking here. I see a headline on Reuters. ECB says purchases during the period between November 27th, that's already next week, and to December 21 will be somewhat front-loaded. Okay, so they're going to buy more bonds from now until just the week before, just a few days before Christmas. Okay, ECB says your system will temporarily pause app purchases between December 22nd and January 1st. And because they anticipate lower liquidity and to reduce possible market distortions, and the ECB will resume its activity on January 4th. So, yeah, so this looks like just an adjustment towards the holiday season, more now, less later, okay? So this is the thing you're referring to. Just put it now on the chat. And I see it as only a very technical adjustment that should not impact currencies. Okay, it's just, if markets would see the ECB buying more now, they would say, okay, they're about to increase purchases. They're already giving us a hint. And if they see the ECB stopping around the holiday season, they might say, oh no, they want to stop it. The economy is improving. So they're giving us a heads up, saying basically, we're doing adjustments for the holidays and nothing to see here, move along. Okay, so I hope that answers the question. So do you have any more questions? Let's talk about a few more currency charts, maybe cover the big events for the week so far. We usually have a question about pound yen, so I'll talk about that before we have the question. All right. Pound yen, 184.60. Okay, we talked here about this 184.50 level. We went a bit below that, but we're now stabilizing above 184.50. Yeah, the low for today is 184.50, so this line worked quite well, at least today. Okay, next line, if we fall further, it's 183.87, and another fall would lead us to 182.35, which is not that strong, and 181. Okay, so we had quite a big fall in pound yen. It's because safe haven flows to the yen and the dovish words from the Bank of England, which I think are not justified, but you don't argue with the central bank. So we had quite a strong movement here on pound yen, on the dragon. If we'll have a recovery, 186.20 is no, let me adjust that, sorry. I think we have a nicer line here at the round number of 186 because it was support back here in mid-November and also resistance when the pair attempted to recover. So 184.50 to 186 is the current range. 182.10 is high resistance, further support at 183.87 and 183.35. More questions here. Up to when do you see the US short covering last, and when it would reverse, could reverse stronger US dollar again, if not today? Well, today, yeah, if not today, if we have a good figure today, it could of course help. But if not today, I believe that after Thanksgiving, we might I'm afraid we might see a bit of boredom in markets on Friday and tomorrow on Friday. So when we have thin liquidity in markets, this means two things, okay? And we have a chance to see that tomorrow, and tomorrow will serve as a prelude for the real holiday season around Christmas and New Year's. So we have two options: either full boredom, nobody's in the markets, everybody's partying, the charts are basically flat like a dead person's ECG, or if we do have some kind of breaking news or some wild orders, we might see these spikes, and these spikes can really easily break important technical levels that you're watching. So we need to be careful. We might see that on Thursday and Friday. If we have another flare-up in the Middle East, for example, we might see things moving like that. That's, of course, unpredictable news. If we have some kind of statements coming, unexpected ones, some interview that Draghi gives to a newspaper, or I don't know who gives, or this could, of course, have a big impact on markets. But assuming we don't have anything, I believe, to answer your question, that to see the US dollar strengthen again, we'll have to wait for next week. Next week is extremely busy. We'll do a preview for that on Friday, and of course, talk about that also on Monday. The whole week we have the ECB, the NFP, and the bonus we have on Thursday, December 3rd, not only the ECB, but also Janet Yellen speaking, one of her last appearances before the December 16th meeting, because on December 16th, towards any Fed meeting, they go on this a silent retreat, if you wish, this quiet period where they don't talk. So we're expecting a very busy week. Also, we have the build-up, the full build-up. So I believe that next week we could see a stronger dollar, especially against the euro. But if we don't have another move today, I mean, today I'm sure we'll see a lot of action, but I'm not sure it'll go in favor of the US dollar, and I'm not sure it'll go against. Well, anyway, we can see lots of choppiness today. Okay. For euro dollar lines to watch, now we're assuming we've settled above 106.70. The next line to watch is 107.10, 107.60, and 108.30 is really strong resistance. Okay, support, weak support at 106.30, 106, and then 105.30. Okay, more questions? Let's talk a bit about what we had so far this week, what we can expect towards the end of the week. Okay, so on Monday we had Eurozone PMIs coming out better than expected. Most importantly, on German manufacturing came out better than expected. All in all, it seems that despite the Volkswagen crisis, German businesses are optimistic. We've seen that once again on Tuesday with the IFO business survey. US existing home sales on Monday came out more or less as expected, a small miss. Yesterday we had quite a few releases. GDP came out more or less as expected, 2.1%. Consumer confidence missed. Today we have a very busy day of releases. Durables goods orders, most important one, core PCE, second in line, jobless claims. Also spending, personal spending, personal income, and revised consumer sentiment. Tomorrow, it's not only Thanksgiving in the United States, but the calendar is quite sparse in general. We have some events, we'll talk about them tomorrow, of the Spanish figures, for example, but not the big ones. On Friday, volume might rise just a bit, and also we have revised UK GDP as the main dish, and we have also a few other events, so it's not. Tomorrow is the quietest day of them all. Okay. Question from Fabian: could the US also get weaker next week? The fundamentals are too strong. Well, if the US fundamentals are strong, I believe we'll have stronger US dollar. The most important event next week is, of course, non-farm payrolls, and we have the full build up towards that event. But if these figures come out weaker than expected, then we can see things tumbling down, right? So yeah, we have, of course, anything can happen next week. I believe the US dollar, if it's now we're seeing some profit taking. You know what? Maybe you could see that on Monday as well because it's the last day of the month. But beginning on Tuesday, I believe we might see perhaps a stronger US dollar. But everything is, of course, data dependent. I think that the ECB is expected to act, and they'll act even more than markets think. We'll have a full article on that on Forex Crunch later on. Really full preview for the ECB meeting. So I'm focusing more on the euro dollar next week. Regarding the US dollar, yeah, it depends on the non-farm payrolls, depends on Janet Yellen, depends on the build-up to the NFP. So it's hard to say at the moment. Okay. More questions? Yeah, euro dollar in the meantime is still struggling. Ranges have been a bit narrow recently, partly in anticipation of action in December. So November has in some ways been a warm-up to December. Had more action here. Oil prices are drifting back down. Let's look at euro yen. Maybe it found the bottom, just above 130. But more or less, safe haven pair is stable. Okay. Any more questions? I see a lot of you in the room. Most of you, I guess, are listening but not asking. We'll soon get to the wrap up for the day. Conclude quite a busy day today. Just show you this once again, the implied probability of a rate hike according to bond markets. It's updated from yesterday, 77.5% of a rate hike. Remember, it's a rate hike to 0.50%. And the Fed, since the financial crisis, does not have a specific rate hike, but rather a range. So the range is between 0 to 0.25, and it's expected to rise to 0.25 to 0.15. So if you look at the effective rate, and the New York Fed publishes that every day, it's around 0.12, 0.13. Bank in the middle between 0 and 0.25. It's expected to rise to around 37 basis points, not the full 50 points. So to get to the full 50 points, we would need 77.5%. To reach 37%, we would need less, okay? Anyway, this is implied probability. If we look further, we see for January, highest chances that it'll remain unchanged at 0.50, assuming a rate hike, of course. In March, it's already favoring a higher rate, or sort of mixed, perhaps another rate hike, okay? In April, it's, it already shows 0.75. In June, I would say highest chances of 0.75, but mixed. July, not much higher, okay? So markets still doubt what the Fed will do after the first rate hike. Okay, so if we look 1 year forward, last possible figure here in November 2016, I would say it's sort of showing us rates perhaps at 125 if we sum all these things, perhaps at 1%. So expectations are high for rate hike in December, but for further rate hikes, expectations are low. Okay, the message is beginning to reach the markets, at least bond markets. If you ask economists, it's 90% for rate hike in December, and I'm not sure about the next levels, but maybe we're seeing euro dollar slide a bit during the show. So perhaps we're already seeing that reversal of profit taking, correction on correction, or things like that. It's not a huge move, but yeah, this weakening of the US dollar with which I opened the show is a bit fading away. Okay. Okay, so if you don't have any more questions, let's begin the wrap up for today. This is the wrap up for the live market open Wednesday, November 25th. Very busy day yesterday and an even busier one today. So we had a weakening of the US dollar because of some kind of profit taking, unimpressive consumer confidence. Okay figures in GDP were enough only until the consumer confidence came along, and markets perhaps are beginning to price in the next levels of US interest rates, and these are not expected to be high. Perhaps a rate hike is already reflected in the price of the US dollar, or at least more than it was beforehand. Individual currencies had individual moves. In Germany, we had a strong Germany for 109, better than expected, better than last month. This supported euro dollar, which got closer to 107, but never really touched that level. We had it move above 106.70, now slide back down, support 106.30, 106, 105.30, resistance 107.10, 107.60, and 108.30. Okay. In the UK, we had appearances of Mark Carney in front of the Parliament, and also Andy Haldane, and we had them go dovish, expecting a slowdown in the rise of wages, contrary to what the data shows us. That hit the pound hard. It reached support at 105.60, 105.50, and since then it bounced back up to the previous resistance line, 151.10, which turned into previous support line, which turned into support resistance 151.10, further resistance 151.60, further support the round 150 level. Okay, dollar yen. The yen is stronger, also thanks to worries about what happened in the Middle East. The Turks downed a Russian fighter jet that invaded their airspace. According to the Turks, according to the Russians, it was only bombarding the bad guys in Syria. Lots of conflicting reports over there. Turkey is a NATO member. These are worrying things. So we have a stronger Japanese yen across the board. I believe that this story will fade out in terms of more military action, but of course there are some worries as always with this conflict. Canadian dollar is stronger now. It's beginning to reverse some of its gains. Dollar CAD is going up once again. So 132.80 is support, 132.40. Why did the Canadian dollar strengthen? Stronger oil prices, because the Saudis are beginning to talk about cutting production. They're a bit under pressure. Let's see if they really make it or not. Oil prices did break above resistance at 42.70 up to 43.40, but since then have also gone back down. Okay, Australian dollar. Here there are more reasons to be cheerful. Currently didn't break resistance at 72.80, very nice line. 73.60, 74 resistance, 72.20 and 71.50 are support. The Australian dollar enjoyed comments by Glenn Stevens, the governor of the RBA, saying basically that he would love to cut rates if it would help the economy, but he doesn't see that happening, doesn't see that. So as long as the Australian dollar does not get too strong, they will not cut rates. They have a meeting in December, and the next one is only in February. Okay, and the New Zealand dollar, no specific news so far, 65.60 in range, but we have New Zealand trade balance at the end of the day. Today is a very busy day. These are the key events to watch. For in the UK, the autumn forecast statement by Chancellor of the Exchequer George Osborne. Focus there should be on forecasts for growth, inflation, and jobs. 1:30 GMT, you have the biggest bulk of US releases, durables, goods orders. It's important to look at the core. Second in line, core PCE price index, the Fed's preferred inflation measure, and jobless claims as usual. But there are also other figures like personal spending, personal income, headline figures, not only core figures and things like that. And the second bulk comes at 3 GMT with new home sales and revised consumer sentiment by the University of Michigan. Also watch out for crude oil inventories expected to resume their strong rises, New Zealand trade balance, and Australian private expenditure for those of you trading the Aussie. Very busy day, busy because tomorrow is a very quiet day. It's Thanksgiving in the United States, where I'm expecting very choppy markets today. Focus on the Canadian dollar and also on euro dollar, and to see what are the next directions. Okay, so that was a long wrap up because we have a very busy day. Tomorrow we'll of course review what we had today, and it's a quieter day, so we'll perhaps begin talking a bit more about next week's events, about the ECB, and of course your questions, as always, are welcome. Okay. See, before we head off, I see another question from Fabian. Where do you see euro dollar at 104.60? Is it still in view, or too high expectations from the Fed and the ECB making it harder to get? What I see for euro dollar is that it could weaken below this level, reach perhaps 102.50, level which Valeria of FX Read mentioned yesterday, or 103, things like that. First leg on Draghi, on the ECB, I believe Draghi could hit euro dollar quite hard. And then on the Fed, we could have another fall below this level, below 104.60, but then perhaps a bounce back. So that's my my forecast. I think we will not see euro dollar parity, but let's see how things evolve, right? Yeah, parity will be harder to get, but 104.60 is not that far away. Only 200 pips to go. Okay, so that's it for today. Thank you very much, everybody, for coming. Yes, I will be here tomorrow. We will review what we'll have today, and talk a bit more about next week. Tomorrow is a relatively quiet day in markets. Okay, so thank you very much, everybody, for your questions. Have a successful and safe trading day, and see you tomorrow. Thank you. Bye-bye.